second favorite thing to do on the show after looking through reports is earnings, because earnings tell the story of the business environment in a particular country. So we're going to dive in to about 5 or 6 companies, starting, yes, with VFD Group, which is, I'll let our guests tell you what VFD Group does. Blessing Adesoye is an investment research analyst with Meristem Securities. She joins us to deep dive into a number of earnings reports that we have. Blessing, good morning to you. Thanks so much for joining us.
Good morning.
So we're starting with different companies, different sectors of the Nigerian economy, looking at the first 3 months of the year, how they've performed financially. What does VFD Group do? What do they do?
So VFD Group is a financial services company, and their basically business model is investing in diversified portfolio of different classes of companies. So they are investing, or they are making grounds, right, in real estate, they have in fintech, or they also have in hospitality. So they do a wide range of services, but they are majorly a financial services institution.
Fantastic. So based on the performance, what does this say about Nigeria's investment environment when it comes to, I guess, asset classes and so on?
So looking at VFD's financial statement, right, the majority of their investment income that came in Q1 came from loans and advances, treasury bills, interest. We also saw from their rental income side. But like the major propeller of their income for Q1 was investment income, and that just shows that the Nigerian's investment space is still pretty much attractive as it is, with the high interest rate environment still making it easy for financial services and even other companies in Nigeria to actually make a lot of interest income from the Nigerians' investment space.
Thank you for that. Let's hop on now to Ecobank, which of course everybody knows what Ecobank is, what they do. They're a commercial bank. What was your takeaway from their performance in the first 3 months?
Okay, so the first thing that is striking about Ecobank's performance for Q1 is the fact that they made ₦1 trillion in gross earnings. This is the first time that they're crossing that ₦1 trillion mark. And we saw that was driven by increases in both their interest and non-interest income. And for the interest income, we are seeing that they invested a lot in treasury bills, and that was what propelled this increase in their interest income, right? Treasury bills grew about more than 50%, right, in Q1 2025, and that just shows how, like I mentioned earlier, the investment space in Nigeria is still pretty much attractive. And if you're looking at the interest rates from between 2023, 2024, and 2024 and 2025, we're seeing that there was a major hike last year, and that's why we're not seeing increased investment income, right, from these banks. They had a lot more investment income last year because there was a significant jump between Q1 2023 and 2024. But looking at this year, we've seen that there's still increase, right, but it's not as substantial as we saw in Q1 2024. Okay. We also saw that there were still FX gains for Ecobank, and ultimately they made a profit after tax, right, in Q1 2025. We also saw increases in their loans and advances, and also deposits from customers. So we're still seeing people taking advantage of the interest rate environment to deposit, right? And also the fact that we'll be seeing a little bit of moderation in fixed income yields, and that has also moved into loans and all of that. And we're seeing that a lot of companies are still coming to take commercial papers, and also still get loans from banks and all of that. Thank
you. All right, we move along to, I think, going to the tech sector now, like manufacturing. CWG PLC, I still call them Computer Warehouse Group, and I shouldn't. That's their former name. So what are they doing? What do they do?
So CWG, like you mentioned, they're in the IT space. So they provide infrastructure services. They also do all this management and support systems for majority of banks. If you're looking at their financials, their major customers would be UBA and some, I think, 2 other banks, which contribute more than 50% of their total revenue in a year.
Wow.
Right? And we're seeing that CWG also this year, they made significant increase in their revenues, right? and this was majorly driven by their infrastructure services segment, right? But if you are juxtaposing with what happened last year, right, there is the fact that last year, the major driver of the revenue for CWG was their software platform and also the support services platform that they rendered. So looking into this year, we're seeing that, okay, they're, will I say, putting much more effort, right, into the infrastructure services segment, and that drove their revenue significantly, right, from about 4 billion to 6 billion just in Q1 alone. So that has, significantly helped them. And when you're looking towards the profit after tax part of their financial statement, it grew by over 400%. Yeah. But if you're looking through everything, costs increased in tandem with revenue growth and all of that. But the major striking factor will still be the revenue that grew, and that was what drove that 400% increase in their profit after tax in Q1 2025.
Blessing, you're hitting these things out of the park, man. This is really good stuff. Let's keep it going. We might stretch the show. No, I'm kidding. We're not going to stretch the show. Fidson healthcare. Let's go to another sector now. I think it's obvious what they do, but what was your takeaway from their performance?
So Fidson also recorded significant revenue growth in Q1, and they recorded their first export sales also in Q1, owing to the fact that they have the license to create vaccines now and all of that. So that helped with their revenue growth in Q1. And we are just seeing that the strategy for Fidson is innovation. So they are ensuring that they are getting licenses to create drugs that most of all of their competitors do not have, and they're also increasing operational capacity. So they're working on getting more product lines and also increasing their capacity to be able to, cater to all of their segments, right? They have three, the ethical, the consumer healthcare, and they also have the over-the-counter segment. And looking at it, all three segments recorded over 50% growth in Q1 alone. And that just, helped with the whole growth that we saw. But the major growth was seen in their ethical segment, which has always been the major contributor.
That's
to
prescription drugs, right?
Yes,
and stuff like
yes.
that. Right. Okay. All
the
right.
ones you can't get without a doctor's prescription.
Gotcha. Yeah.
Yes. So the ethical part is still the major propeller of Fidson's growth, and that just shows how scarce these things are and how expensive these drugs are also in the Nigerian space, right? Going down, their costs increased by over 100%, and they're still importing a lot of active pharmaceutical ingredients, APIs. So that was the reason why their costs also increased significantly within the period, right? Finance costs reduced, right? We also saw that their profit after tax is still increased despite the increase in all of their line items. I made a mistake earlier. Their finance costs.
Hey man, you're doing this off of memory, so you're entitled to make one mistake or two. I'm just marveling at how well you go. Yeah, keep going, man.
So their finance costs actually increased this Q1, but looking at everything, the increase in their revenue was still able to cater for all other increases in costs and all of that. That still helped with the bottom line for Fidson in Q1 2025. So for going forward, we actually expect that there'll still be better revenue growth, bottom line expansion for healthcare Fidson as a whole, right? Because they are focusing on innovation and expanding capacity. So
I don't want this segment to end, but let's get to our last company is Better Glass. I think they make glass, right? For different
crowns, crates, and they service consumer goods. They service a lot of manufacturing companies, actually, from pharmaceuticals to consumer goods. They do all of that. The bottles for your drugs, the beer bottles, malt bottles, also bottles for creams and all of that. They do it. Then the crowns too for those bottles, they are made by Better Glass. And also the crates for storing and movement of all of these things.
They make that too.
They make that too. So everything is majorly domiciled with them. They do a lot of companies from Harp to Malta Guinness, Amstel Malta Guinness. They service majorly almost all the liquid or beverages producing segment, brewers, I mean. So they also recognize significant revenue growth, 82% thereabouts this Q1. But looking at their costs, it was relatively lower, 21% thereabouts. And when you're looking at the breakdown, it's basically the energy costs that actually fueled the increase in their cost of sales, right? And looking at raw materials, it was significantly, or will I say, relatively stable, with about a 3% growth in their raw materials costs. But if you're looking at last year, full year last year, Q1 2024, we saw a significant rise in their cost of sales, raw materials especially. So that just shows the impact of the volatility of exchange rates during the period, and also import costs and all of those things together, right? So for this year, we are seeing that they are putting in cost control techniques, which has helped with this raw materials cost remaining relatively stable in Q1. We know that petrol prices, diesel prices have been up and down between last year and this year, and that was why the energy and fueling costs actually increased in Q1 2024. And that also went straight down to their profits, and we saw that significant increase in profits for Better Glass in Q1 2025. And looking at when they released their financial results for Q1, that was 1st of May. From the 2nd of May to date, Better Glass on the NGX has been doing minimum of 9.9% every day. So we're seeing that investors are reacting positively to the news or the statements that Better Glass actually released this year. But Better Glass is a very, very strong company, and over the years, they've been doing significant increases. They've not done anything less than 50% increase in revenue over years. Q4, or like the full year of 2024, they made over 100% increase in their revenues, and that goes straight to their profits also. So Better Glass is actually a really, really strong fundamental company.
Blessing, this is amazing stuff. Thank you so much. That my goodness, you guys at Meristem, you got all stars at your firm. So look, we put all this together now with these different companies that you've broken down for us. What is the takeaway? Is it more stability compared to the prior years, or? Yeah,
so business environment this year has been relatively better than what we saw last year, right? There's the relatively stable exchange rates, just hovering between 1.4 to around 1.6 Q1 2025. When we compare that to last year, that's almost the same thing. If you're looking at the difference between 2024 and 2023, where you went from about 400 to 800, 900, and then 1.2 at the beginning of the year, and all of that. So the relatively stable exchange rates has done a lot of good for companies, especially in the real sector. Because if you're looking at companies' financials just across industrial consumer goods, we've seen that a lot of companies in the consumer goods sector have actually recorded profits after a series of losses from 2023 till the end of 2024. So the business environment, right, for Nigerian companies, real sector companies this year has been really, really great. This year, due to the FX stability. We're also looking at import costs. If FX is relatively stable, definitely there's going to be moderated import costs for majority of these companies, and that's why we might be seeing lesser growth in their cost of sales this year. And for a lot of them, we're expecting them to return to profits for those that have been making losses for a majority of companies in the real sector this year. And we're also expecting that revenue growth will continue to expand. All of them have different strategies to improve distribution channels, to also improve penetration and all of that, right? And with the fact that inflationary pressures are relatively stable this year, we're expecting that companies will continue to do better in 2025.
Blessing Adesoye, I've asked enough of you today. I mean, I was going to include the retail savings bond and treasury bills. I'll give that to someone else. Look, thank you for an excellent recap of the Q1 earnings for these companies. Blessing Adesoye, investment research analyst with the awesome people over at Meristem Securities. Thank you so much for your time. Really appreciate it.